It is first week of October. Chris Johnson.
How we doing, Tom?
It's crazy, man. It's crazy week.
It's crazy.
I mean, it's a historic week. I think, we want to talk about all this volatility. We want to talk about AirBNB. We want to talk about portfolio rebalancing. But I've got something I want to show everybody right off the bat. And you've got something that happened this week that anybody, unless you're living under a rock, you heard about earlier this week, something that happened up on the Hill.
Yep.
So what's going on, Chris?
Well, we saw Kevin McCarthy get ousted as Speaker of the House. That is, historic from a couple different perspectives. The last person that the House tried to oust like this was John Boehner when he was my representative. And John Boehner just stood up and said, yeah, go ahead and try. And of course he did, and he survived. They didn't even bring it to a vote in John Boehner's case, but a lot of people don't realize that he actually retired 3 months later and said, I just can't do this job.
Right.
So, he kind of fell on his own sword here. But this is, Tom, everybody, I've had a lot of friends since last night have called and said, well, what's this mean for the market? And the only thing that you and I can say, I think anybody that can say about this, you can start to talk about the economy and blah, 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 blah. The biggest effect, in my opinion here, is it introduces more uncertainty, and the market hates uncertainty. So I look at this from two different perspectives. We're going to see it. And today, we got a little bit of bounce. It doesn't have anything to do with that. It's the markets are oversold. But when and they're going to take a week off, right? Which we got to get a job like this, Tom. Forget about it. I mean, they just said, we'll come back next week and we'll start trying. It took them 15 tries to get a speaker last time around. And they're not able to legislate until they can actually sit with a speaker. So are we looking at months here of this type of uncertainty? I think the answer is yes. But that's going to be one hell of a catalyst for the market to take off when we finally get this nailed down.
Yeah. I'm telling you, I'm with you. We need something that gives us weeks off of vacation. We can just take whenever we want. And
all right.
But hey, you know what? We love what we do.
This is true.
The one thing I wanted to mention is, and I'm mentioning it because we've been talking about it for a while. So a couple of weeks ago, you and I were coming in saying September is going to be a bad month,
right?
But October is going to be a rebound. And now I'm looking, and the money calendar, all the seasonality stuff, points to it. I mean, dare I share it with everybody? Let's go. Let me throw it up on the screen real quick. There's the calendar.
Ooh,
wow, it's green, dude! It's green across the board.
And a lot of 90 and 92% there.
Again, folks, this is the last 10 years of data on the most popular stocks. And the start days are all here on the calendar going forward. And these start days will go anywhere from the beginning of November to the end of November. So it really kind of tells us that fourth quarter is likely to move higher. Now, we're already into the first week. First week's behind us, and we've had a lot of volatility so far. So is this a concern off of how bad September was? Possibly. Is it a concern about the fact that the Fed, which meets in November, is planning on raising rates again? That's a possibility too. So we might see a diversion here. Chris, I thought, well, let me look at the 20-year. Because I can look at 20 years of data. There's the 20-year. Doesn't look like anything changed. The last 20 years.
There's a reason. There's a reason they call them trends, right?
Yeah. And then, of course, I thought, well, let me look at just the ETFs only. Pull all the stocks out. Same thing. Maybe a little bit lighter shades. But the majority of the ETFs are all bullish too. So all I can do is take that data and add that into, I add it into the bull camp. But then, you got to look at other things. And what we do is we look at other things to get an idea of where these are going. And one of the things that you brought up, Chris, and, want to talk about that for a bit, is you started looking at volatility. You started looking at when the markets were moving, what was it, more than 1% in a day? Or tell me a little more about that data.
So specifically, and I think, Tom, we all go through this when you start to enter a month where you expect one thing and you start to see another, and we're only on the fourth day of the month, so let's not freak out yet. But you start to go, what if? What if seasonality doesn't kick in October? And then the thing you and I reflected upon something you and I said last week, which was that we see increased volatility in October. So in other words, it's a comeback kid month. It's not necessarily has to start on the positive, but it ends in the positive. So with that, armed with that, I started to break it down and say, okay, why don't I look and see which months of the year have the biggest number or the largest number of instances where the market moves down 1%? So just down. I only looked at the negative because that's right now the way this feels. And we just had a down day 1.3% yesterday.
Yeah.
And overwhelmingly, I sent you a chart. I don't know if you had the time to look it up or throw it in there, but
Tell us about it.
if you look over the last 20 years, October is the second month in terms of having the highest number of down days by 1% or more. You want to take a guess at what the first month is? The highest?
September. Oh,
March.
the highest.
Yeah.
Really?
March.
Oh, you know what? That makes sense because I've actually looked at some of those Q1, the end of Q1, and we had those moves to the downside. And of course, 2020, March of 2020 was one of those biggest, it was the biggest move that I've seen in 10 years.
Yeah, when you look at it, there have been 90 days over the last 20 years. So, we can average that out and just say it's 5 or 6 or so, right? But there have been 90 days where the market has been down more than 1% in March. And this past March, we had 5. And that's February kind of blew the number out. We actually had 5 in February. Normally we average around 4. But that's when we had that banking crisis really starting to come into the market, right?
Mm-hmm.
So this is just another view of seasonality from my perspective. When does the market tend to be more volatile to the downside? The answer is February, March, and September, October. So October still, I think we've got some pain to the downside possibly, but still looking at that money calendar that you've got, as well as those trends saying, hey, we should hit, I would think, a hard bottom at some point here pretty soon.
Yeah. The thing is, though, and you said it, hard bottom. Now, I took some of the information that you just talked about, and I ran a scan because I wanted to see stocks that were really kind of the tail wagging the dog with all this volatility. So let me put up on the screen the stocks. Now, this is 11. What do these 11 symbols all have in common? Well, they're all moving greater than, look at the medians on these things. They're all moving 4% or more. The stock change in the last 7 days, the majorities have been to the downside, obviously. And there's a couple of ones that have moved higher, but I want to talk about those because just because they're moving higher doesn't mean that they're moving higher. It's because the overall market's moving lower. But if you take a look here, the ones I have highlighted, Wayfair, Camco, Carvana, Upstart, Coinbase, and C Limited. These are all companies that, with the exception of like Coinbase and C, they moved to the downside. Right now, at the very top, you see ProShares QQQ. All right, that's TQQQ. That's moved in the last 7 days for over 4% down. So, like Wayfair, 4% down. Camco's down 10% in the last 7 days. Carvana down 5%. Upstart down over 2.5%. Here's Coinbase up 1%. Now, take a look at this is the small cap bull. That's down. Now that's the TNA. Isn't that got a little bit of juice in it? It's got some racing fuel, right?
A little bit of leverage. Yep.
Yeah. So it's down 9.5%. Here's C. They're up 5%. But then here's a bear that's up. Well, bears are going to go up when the market goes down.
Correct. Right.
That's the Direxion Daily Small Cap Bear. Here's the ProShares VIX futures up because the VIX goes higher when the market drops. Here's the VIX futures ETF, VXX, up 11.6% in the last 7 days. And, if we were to look at these and kind of look at a couple of, let's just look at a stock or two as we're kind of finishing up our session on volatility. Take a look at, let's bring Camco up. There you go. You see these areas that are that I've got kind of encapsulated in
Yep.
looks like some volatility ranges. These are the areas where we had those big moves happening. Outside of them, we didn't get the daily up down moves that warranted these big 4% on average moves. Take a look at what happened here. You started getting some up move. We squiggled a little bit, and then we're dropping really hard. And Camco's gone this week, in the last week, from 42 down into the mid 30s. There's your greater than 10% drop.
Well, there is also, right, because Camco is CCJ, right? Uranium. And maybe we talk about this next week a little bit. They do refinery services, but their energy, and man, that USO trade gave everybody a little bit of a scare here for the last 3 or 4 days.
It did.
Is that CCJ just kind of a pullback in energy, and everybody kind of, maybe we're going to take profits here.
I think you're spot on with that. And then let's look at number 2 on this list, and it's probably, C Limited is a mover as well, but look what it did. It popped to the upside. It dropped off this bottom down here at 35, and it went from 35 to 45 very quickly, and then right back down to just above 40. But you can get an idea that the scan that I'm looking at is I'm looking at stocks that are basically what I call movers. That over the last 7 days they've got up, they've gotten on the horse, and they've giddy up out of town.
Yeah,
and so that's what we see there. And once again, I'll throw this list up one more time for those of you that are watching this that want to take a look at these. Wayfair, symbols W, Camco, CCJ, Carvana, CVNA, Upstart, UPST, Coinbase, Coin, and C Limited, SE. And interestingly enough, I can tell you 1, 2, 3, 4, 5. All of these I have had put trades, short put trades. And I'm not talking about right now. I'm talking about over the last maybe year or two. I've had put trades on short puts on a majority of these because the juice was the puts were so expensive.
Right.
Well, and I've won on most of them too. But
that number 4, that is a that's that meme stock Carvana there that just seems to go on and on and on and on and on. And I think this is a great, Tom, and it's kind of a great segue for us to go into our next segment. But the consumer, everybody has thought that the consumer was just ready to keep, running a marathon here. And when you look at Carvana, this, I think, encapsulates what's going on with some of that discretionary area of the market. Those higher and longer rates, think about that with cars. It's going to press people in terms of you can't go out and just get a cheap car right now. Car rates, if you look at the Manheim Auto Index, the used car auto index, prices are coming down. Carvana's sitting on a bunch of inventory that they paid up for. And
I'm kind of two-folded on this, and I think the market.
Let me see the other side. Yeah.
Take a look at, the earnings. It says they beat expectations. You know what they actually ended up doing? They actually lost less than the market asked. That is not, to me, that's not a beat.
No.
But, to Wall Street it is. Here's the thing. I'm with you on the inventory. But don't you think that the United Auto Workers strike right now is like a gift to these guys to get rid of some of this?
I hadn't thought of that side of it. That's a great point, Tom, because I know the dealerships loaded up with inventory ahead of this. So you had a lot of those dealerships. And this doesn't, I don't know why I don't think of this from this simple perspective. Honda and Toyota are operating okay right now, right?
Well,
they're not.
Of course they are. So is Ram. I got a Ram truck on order that it shipped. It's out of assembly and shipped. You know why? Because it was not made in Detroit. It was not made anywhere in Michigan. It was assembled in Mexico. And Mexico's not on strike right now.
Nope.
So and these are heavy. This is the heavy duty truck industry. This is this isn't this is all the vehicles that are, I think, 50,000 and over. Right. Actually assembled for Ram. They assembled this stuff in Mexico. So, all I'm waiting for is it's got to go through customs. So it's going to take a little while, before it crosses, into our border, and then eventually ends up at the dealership that I'm going to
Right.
take delivery at. But I mean, coming back to Carvana, I got to think that you would think that this would be good for the company, and that it would cause the prices to actually rally, but they've gone down. So am I missing something? Are investors missing something? Or is it priced appropriately because what you just said, they got too much inventory at too high prices, and maybe it's people are factoring in that this strike will be over before the holidays, because the last thing in the world that these poor auto workers want to go through, the ones that are unionized, is to go into the holidays not having a job or not having a contract. That would absolutely suck if I were on the line at one of these manufacturing companies, and right now I'm not on the line. I got a sign in my hand, and I'm walking around, and it's not going to be warm for very long. It's going to start getting colder up there, and it's a pain in the butt to be striking. I mean, the only good thing about striking in winter weather, CJ, is that once you have your hand up, it's going to be frozen. You can actually leave it like this with the sign. You won't have to worry about your arm getting hurt, because it's the ice is going to freeze it, and you'll just, you'll be able to hold that thing. You won't be able to walk very fast.
No. Hey, Tom, you ever been in Michigan in the middle of winter?
No.
Up around Detroit?
Whew. No.
Oh, I know you spent time in New York.
A hotel doing a seminar, so I was never outside in Michigan.
It's a brutal cold, and I think it probably it feels romantic to stand around the burn barrel for a little while and hold your sign. But man, once you got to take a step or two away from the burn barrel, wow, that could, you're right. We'll see how long this thing goes.
Let's segue into what you want to discuss, which is AirBNB.
Yeah, you know what? Let's take that message about the discretionary. And I just wrote something that all of our subscribers are going to get here yesterday, actually. And it's my view on Airbnb. And if I, put myself up, we always like to talk about our successes. But you know what? In the beginning of 2023, I was looking at Airbnb, and I got asked by someone in the media, what are your stocks that you think aren't going to do well in 2023? And Airbnb was at the top of my list. I looked at it and said, you know what? Interest rates are coming up higher. I think that we're going to see a slowdown in the economy, and that means that people are going to travel less. Well, halfway, 2/3 of the way through the year, or 3/4 of the way, and the stock's up 50%, Tom. So it's outpaced Apple. It's outpaced Microsoft. It's outpaced not NVIDIA, but it has been on fire. And it's because of that message that we've heard that the consumer is going to keep going. Well, when I had to sit down and review where I went wrong, my little, I do these little postmortems. I started looking a little harder at Airbnb and found that when you look at their actual reservations now, as we head into September, they have dropped by 30 to 40%, depending upon what city you're looking at. If you look at New York City, it's 77%. Why?
Well, there's a reason why.
Right.
Because you know what? If you're going to be a host, you've got to actually be there. You got to be like a hotel. So, they want to obviously get that hotel tax. But but the city's more interested in filling up hotel rooms than filling up folks that have got second or third houses and they want to become hotels. And so, that doesn't surprise me. It's off big because, the other thing too that's happened is rent and sales in the area has dropped too, because all these people that had Airbnbs, that now they got to decide, all right, do I rent it out long term, or do I just sell it, flip the house, and move on? A lot of them are selling and flipping the house, and it's actually putting a little bit of inventory on the market.
It is putting a little inventory on the market. Even here in Cincinnati, we've got right now some laws that are working through the system, and our city council moves pretty slow. But we've got some resolutions going through that are raising the taxes on Airbnbs, and they're limiting them to certain areas. So they're going to cut back. I've got in my neighborhood 7 of them in my tiny little neighborhood, because I live downtown, close to the football stadium, close to the baseball, the soccer, all of this. But they're going to take it down to 3 in my neighborhood is what they're looking to do. And you have to be licensed.
Well, so the model that's happening in New York, every city in the country is watching.
Yes.
And there's a lot of and the media likes to shove stuff into one side. And right now the media is saying, yeah, get those Airbnbers, because those rich people that have their extra houses they want to rent out. And honestly, I like Airbnb. I like it. I'm not a host. I have someone who hosts our property in New Zealand. So I'll tell you a couple things. Our reservations are down. I think our reservations are down because it's a little bit of a higher end price tag, and less people are going out and spending money. The other thing I got going on in New Zealand is that they're still although they're allowing people to come back into the country again, it's still, with this latest rash of COVID, people are wondering, oh, should I travel? Should I not? I saw a bunch of, we're starting to see sale tags on prices, to get in international flights have come down quite a bit from these crazy highs that we're at earlier in the year. That tells me that tourism, that international tourism is not at the levels that some of these, at least the airlines like it to be, because they're lowering prices. So it's affecting discretionary. I can see it firsthand. But I like Airbnb. I like the Airbnb concept because they add competition to prices. And for somebody like me who doesn't, sometimes I don't want to stay in a hotel room. I want to actually have a house. You got a little bit of room, especially if you're going to be there for longer than a week.
So
you feel like the space is yours for that time. But I can definitely see where, you look at some of the stuff going on, regulations, we'll call it that. There's regulations that are hitting the hosts. There's interest rates going up. Fuel prices have been up. Therefore, that's been affecting airline travel for a while. I mean, getting a ticket anywhere is now 50% or more expensive domestically than anywhere else. The international rates are coming down, but that's because people are not traveling internationally as much as they were. I wonder if revenge travel is starting to fade off a little bit too, and no one's talking about it.
I think it is. And you've got, you mentioned the international travel. Remember a couple months ago, that's what the airline said. We're okay with domestic dropping off because international is alive and well. I can tell you that it's dropping off as well. So I think you've seen it across the board. And the other interesting thing, you mentioned the hotels, Tom. I don't know if you've caught them, but they've got some great commercials that they've been putting out. Hyatt, I've seen, has been doing these, and they have literally been saying, there was one commercial during a football game just a couple weeks ago. You didn't go on vacation to have a to-do list before you left the house. And they're talking about those lists.
Oh,
put
the
dishes, take the sheets off and put them in the washing machine and run it and all this stuff. They literally have been playing on that angle, which you mentioned. If I'm staying for a week, bring it on. I don't mind it because I love having a house. I love having a kitchen I can cook with. I love all. But
you are right. You know what? And as a kind of a host, we have those rules too.
Yeah,
we have those rules in New Zealand too. In fact, you got to put all the garbage out. You got to make sure the recyclables have been washed and put into the recycle bin. And that's not me. That's the municipality. That's the town in New Zealand that they want it that way. It doesn't matter whether you live there or whether you're renting. That's just the way it is. And so people that come and stay internationally at my place, they're not used to that kind of stuff. They're shoving garbage in, whatever, it's piling up everywhere. And, they're not. But, I understand you're not going on vacation to become a maid on your final day.
That's right.
So, we keep that. But what a great commercial. Let me throw a chart up. Let's throw a chart up of Airbnb. Here it is. This is just going back the last 100 days. And you can see the lows down here around 105. That was back in May. Your highs were 153. This is a good, 50% gain on this stock, but just during summer. But since then, we've seen a pullback back down to just north of 120. You get that run back up again. It almost looks like the price of gold. It almost got to those new highs and then just fell off again. So here we are, back down the mid 120s, mid to high 120s.
Yep.
Where do you see this thing?
So I'm positioned right now for it to go down to 100. I've got a target of $100 by next March. I'm positioned with a March option, which I bought some time on this one. Interesting here, when I was looking at this trade, I also pull up a chart of Delta Airlines, DAL, and look at the similarities in the
Before I
chart.
do, I want to see the moving averages and the crossovers and see if there's anything that looks like it might be ready to cross here to confirm what you're talking about. Oh yeah, kind of already has. You kind of got days ago. You kind of got that bearish cross going on. But let's look at DAL
and just keep that memory. Keep that chart in your memory.
Oh,
look at that.
Wow, DLL's leading. This is leading the pack, and you can see right now. This pretty much confirms what I said, which was, after summer, and here this is mid-July. This is like almost the beginning of August. This thing started breaking down. It's no longer $48. It's $35. It's come off quite a bit. Now you got earnings in Delta next week, and already the volatility is as high as it's the highest it's been all summer. This is going to be interesting. And I'm with you. They're lowering prices. Delta's now got routes to Australia, nonstop to Australia, I think from LA. They're advertising these things. They're putting them on sale. And there's a lot of competition now to head toward Australia, New Zealand,
sure is.
The whole Pacific Rim, because it's not just Air New Zealand anymore is doing these flights. Everybody's getting involved on these long hauls. Now they're trying to underprice each other. And I think for two reasons: competition and lack of demand.
Yeah.
That's my thoughts there. So yeah. Boy, Delta's looking like you time this thing out correctly, there's some good premium to be had in a stock like Delta Airlines.
Delta's going to be an interesting earnings call too. A very interesting earnings call.
So let's finish up talking about bonds. I got a chart of the bond market up right now. This is TLT. I mean, look, this is definitely the summer of sell for bonds. So TLT has gone from 107, almost 107. This was back in May, to now fresh lows this week, down in the mid 80s. And you think, is there a bottom here? But what's your thoughts on bonds? And then how are you trading? How's your portfolio? And I'm not talking specifics. We don't talk specifics here, but what have you done recently with your portfolio with, when it comes to the bond market dropping and obviously the stock market too?
One of the things I did, all that cash that I've had sitting and waiting for an opportunity to jump into the market, which I have had a lot of sideline cash, went out and bought some 6-month CDs, Tom. When I can get, 5%, when you've got banks that are right now, and you got to look for them pretty hard, and you can go into, I think a lot of people, maybe our listeners don't know, if you go into your Schwab or if you go into your TD Ameritrade, and they're obviously the same company now, if you go into your E-Trade account, whatever you've got, they have tools in there so you can look for CDs from banks all over the place. So that's one of the things that I started doing. I said, you know what? If I can get 5.6% in some cases on a 6-month CD, I'm in. I mean, I'm in. I have shorted the TLT myself 2 different ways. I leveraged it a little bit because I had a short term when we broke through 100. I said, hey, man, this looks like we could go through a 90. And now we're at rates where, if you look at the TLT, go back to 2007, 2008. I mean, that's the kind of drops that we're having right now.
I mean, I can show you a 999-day chart. Here. Anything more, it just gets really blurry. But I mean, this takes us all the way back to 2020. I mean, TLT was at 171 then. It's been cut in half because back then, if you remember, folks, interest rates were 0 by 0.25.
That's right.
And now we're in the 5.25, 5.5 range is what's happening.
So
big difference.
I also added the TBT for those people who don't want to, buy a put on the TLT. The TBT is the inverse of that, and it's a pro shares. And it is an ultra short. You can go out and short by holding this ETF I always warn people, remember that if you're shorting something through an ETF, there are costs that come with that. Slippage, we'll call it, because they use futures instruments. But that is my slower roll that I've got on that. Outside of that,
Isn't that
Tom,
crazy? That is absolutely insane.
outside of that, I am simply trying to manage the cash right now and wait to find out how long I think the bond market is going to torture the stock market with these higher yields, because that's what's going on right now. We're in a slow drip process, and it's not that slow. It's pretty quick. They've got the fire hose going right now.
I'm going to give you my closing thoughts.
Yeah,
so
let's
I'm
go.
going to put VXX up here. All
okay.
right. So here's VXX. Now I'm looking at VXX over the last. This is a 100-day chart, but I mean, let's bring it down to 50 days because, again, this is one of those instruments that just seems to drop all the time. But when you have a VIX, and this is VIX futures, that's gone from 50 in upwards of 100, what has happened, folks, is the volatility has now doubled in value.
Right.
So for me, I look at that as a, now I have, I have the bulk of my options are all short puts, and I'm down on my short put stuff in the last 30 days. Not as much as the actual asset holder, that's for sure. That's why I short puts.
Right.
But at the same time, my longer portfolio, the one that I have the majority of my money in, our longer term portfolio, I am now 50-50 on that, just about 50-50, where 50 on the stock and stock, and I got a little bit of options in there, but the other 50% is sitting right in SGOV.
I love this. I love it when you bring this up every time too.
And I don't even have a chart on that because it's not optionable. But SGOV, if you were to look at a chart on SGOV, it's going to be, let me just see if I could bring one up anywhere.
Yeah, this is the funniest chart. It's the most consistent chart in the market.
See that thing? It just moves like this.
Yep.
It stays, and what it does is it just pays you that short-term interest income, dividend, whatever you want to call it, and it's paying out right now. Oh gosh, I think it's paying out somewhere around 5.5% as of now. This is the 0 to 90-day Treasury bills.
Yep.
And so it's paying. It was paid out. I think it paid out 44 cents last month. We're due to get another payout here, I think, in a couple of days off of September. That's going to be probably about the same. I think October is going to be a little bit higher, and it just fluctuates up and down based on what goes on in the markets. Now, great thing about this is that you can get in and out of it like a stock. So if you're ready to pull the trigger and say, I'm done with fixed instrument, sell, and then you can rotate right into some risk on position.
Yep.
And that's what I'm doing. That's what I'm doing. So
click the year to date on that. Let people see who are actually watching us with a pattern of this.
There it is.
Yeah.
And when it goes down, that's when they pay you out. It starts over again.
Dividend.
Up, down. It just moves like this. And so
that is the tortoise that's going to win the race. That is the tortoise that is going to win the race, Tom.
So for the first full week of October, we're done with that. We get back next week. You know what? Let's get into some commodities next week. Let's talk about metals. Let's do a whole show on metals next week, Chris.
Love that. Right. Love that idea.
So, thank you all very much. Have a great rest of your day and rest of your week. And of course, we'll see you again, same time next week. Bye, everyone.
Bye, everybody.